Hello, everyone, and welcome back. My name is Crypto Ranger, and this is our brand new channel dedicated to sharing strategies using our institutional grade trading system called MarketSpy. This is the MarketSpy channel on YouTube. Please subscribe if you haven't already so that you don't miss out on content that I'll be posting here regularly. Yesterday, I distributed MarketSpy Trend Runner free of charge to our MarketSpy subscribers and members, whether you're lifetime or just annual. You have the privilege of enjoying Trend Runner. Trend Runner is an indicator that defines trends for you and also gives you buy and sell signals with stop loss placement parameters all baked in. So I want you to really pay attention to the chart and understand context, because context is something that I cannot code into the algorithm, and that is something that you'll have to bring to your trading through understanding what price action really is all about. The first thing that we're going to look at is directionality. To establish directionality for a trade without using Trend Runner, let's just turn that off. We're going to be focusing on Armageddon and supporting momentum indicator, our module that is responsible for reading momentum called MSX. MSX stands for MarketSpy crossover. And the crossover points are indicated by these little dots over here. See this little red dot? Actually, let me go ahead and do the demonstration mode so you can easily see what I'm pointing at right here. These are the crossover dots, and they basically direct price to either the upside, or if you have a cross that looks like this, to the downside. Armageddon is an intraday system designed to show you reversals or continuation signals. The basic idea here is that when you see green, you're long. When you see red, you're short. Now, it's easy to say because you're going to witness something like this. And this is where we need to apply some discretion to filter out quality setups from noise. So signals are most potent when they go above the baseline. This green line is called our baseline. When price crosses over the baseline, we need to wait for one criteria, which I refer to as baseline retest. A retest would look something like this. It's either a piercing or right on point candlestick that has a long wick. Now, it doesn't have to be long, but sometimes, it's using long wicks is just easier to determine if we have a retest or not. What price is actually doing is you have a moving average, which is if we're trading below it, we're at a discount. We're trading above it, we're at a premium. When price interacts with the moving average, it essentially tells you that I have entered a premium pricing model for the asset, whatever it is that you're trading, Bitcoin in this case. And the market now needs to know, did we really go into the premium? And if price comes back to its previous fair price, which is indicated by this green line, and there's demand that will look like a long wick or a retest like this, then we can say that buyers are interested and it will break the previous breakout point, which is somewhere around here or here, depending on how you look at it. And that break and close above it indicates that we have bullish momentum. So that's number one. This is how you interpret price action. Previous price. Now we're above that previous price. We're testing if that previous price is good enough. If it is, we move up. Moving average creates support, and we start zigzagging all the way up until we have a break of that moving average. When the break happens, usually it will look something like this. The best way to interpret the break is to actually hold Alt and I on your keyboard to flip the chart upside down. And you can see that we have entered a sell-off territory right here where we had a couple of retests, retest 1, perhaps retest 2, and retest 3. And then from this point forward, price started to decline until we reached this point where we had another exit. So the reason why we need to start with these basics is so that we can understand the general sort of understanding of what the market is doing relative to the moving averages. Now, there are different moving average types. We have determined that the set that we have included here, which there are a few of them. One is derived from higher time frames. This is where the sellers are found or the buyers are found. This is what we call an equilibrium zone 3. We also have equilibrium zone 2. And finally, the moving average that hugs price closely together, we call it the equilibrium zone 1. Equilibrium is where price tends to come back to, and it wants to ask a simple question. Are you interested in a discount from the premium that I'm trading at? If you are interested, we will see a bundle of candles like this where price is going to go up. And this means that the market is willing to pay for that discount to participate in the premium. That's the basic understanding of why baselines, as the name suggests, it is the base of everything, is so important. Because price action alone, if you were to look at this chart, doesn't really tell you much until you augment it with specialized indicators or software that gives you context. Now, the second thing that we look at is supporting momentum. It is important to understand that while you have these sell-offs on lower time frames, momentum, this one is set to 3 days, but let's set it to 1 day, is going to show you what price is doing on higher time frames. So if you have momentum that is extremely oversold and going up, just because we have a sell-off here doesn't mean that we have to be shorting into it. Context, we have sold off already, and we have found some form of support because we're now consolidating. After a consolidation, we have reactive move to either the upside or the downside, depending on how momentum looks like here. So there are a couple of things here that I have developed to help you find profitable setups, but unlike other channels, I want to emphasize risk management. And your entries are not really impressive to me or anyone else. What is impressive is if you're able to preserve your capital. I don't care if your hit rate is 20% out of 100, if that's your win rate. You can still make money. Win rate goes out the window in our philosophy because you can simulate win rate and synthetically design win rate that will look great on paper, but it's the actual trades and your exits that determine the end result. So, having said that, there are many courses on candlestick patterns. There are many sort of books that you can buy that will explain hundreds upon hundreds of different candle patterns. Inverted hammers, doji, shooting stars, rising stars, whatever. You name it. In MarketSpy methodology, we have consolidated all of these candles together into a simple shape that we call the House of MarketSpy. Now, this is something that I'm sharing for the first time, but I guarantee you it is the undisputed king of all candlestick patterns because it is geometrically impossible to produce anything that would violate the actual structure of what I'm about to show you. Now, with the indicators and the trend runner, I'll explain two things. First, Armageddon gives you directionality based on the bias of the baseline. So if it's up, it's up. Don't worry about if it went up a little bit, like over here maybe, or it went by a lot, like over here. This area is tradable just as much as this area is tradable here. As a matter of fact, you would probably make the same amount of money here as you would over here. I'll explain in a second. Armageddon is too big of a monster to get into right now. So I'm just going to say that now that you have a snapshot of what is happening here, this is a recent price action. We're not going to do bar replay. We forward test and we look forward to the next setup that develops on the chart. We don't really care about what happened prior, except for recent price action. Everything else historical is of little interest to us as MarketSpy traders, system traders. So now that you know that this has been up and this has been down, this has been up, this has been down, you don't necessarily need an indicator to see that it's been up, it's been down, it's been up, it's been down, and now it's going up again. But you do need indicators to visualize the starting points of what is to come. And this is where Armageddon really shines because it gets you in early and it avoids areas where there's a lot of noise. But anyways, I'm too excited to share this, and so I'm getting ahead of myself. Let's get back to the basics. So the house of MarketSpy looks like this. Now, this pattern, you cannot draw this pattern anywhere else besides here. This is not forcing it. This is actually waiting for the shape to come. Now, you may say like, okay, what about here? What about something like this? Is this not the house of MarketSpy? And I'll tell you no, because momentum is showing that we have yet to bottom out. Now, when we go over here and we see some indications where we have some bottoming, this gray line RSI becomes green like this, and usually that indicates a bottom. You have your VVS signals, volume and volatility stress, starting to fade over here. And as it develops, you're building your house. You're looking for a long wick, followed by what looks like a bottom, and simply a higher low. And higher low is an undisputed pattern that geometrically is impossible to break. For example, if this candle were to go down over here, for example, this would instantly invalidate the signal. But your entry point is obviously is going to be somewhere around here for a continuation. But if this were to reverse and go down, you would simply start trading this. It would have been somewhere over here. And then obviously this would have been the higher low, and off you go. Geometrically impossible to break this pattern. There are a bunch of candles here, like this hammer over here, like this inverted hammer, this bullish engulfing, that you could potentially spend time interpreting. But I say, why do that when you can just wait for an arrow shape like this to show up and understand that this is your cap, this is your valley over here, and that most likely marks the end of the sell-off for the time being. Today we had another shape over here. Actually, one of our traders here noticed it. You can see the P&L wall is being populated quite nicely over here. We have setups every day, so join our Discord if you haven't already, while it's still free. Haha, kidding. It will always be free. So the house of MarketSpy gives you an idea of where the reversal might happen. To use this, you can use it on its own. using momentum and say like, okay, we're oversold. This is momentum and we're going down. Again, green, we're going up. And so very easy. And the most beautiful thing about it is that your stop loss is always protected because you are in the demand area. And what you have to do is wait for price to break the candle that actually printed the rooftop. So once you have a break of that candle, the close of that candle, this is your signal to go short. Or once you break that candle over here, this is your signal to go long, and put your stop loss right here. Now this instantly gives you an incredible, for example, risk to reward ratio, where if you aim to capture 1 hour like this, these 2-3 candles would be sufficient to get you out of a trade at 1 hour, but your size would be huge here because the difference between your entry and if you're risking 1% of your account to here is only $400. And because of that, you can trade with a bigger contract size. If you don't know how risk to reward ratios work and what stop loss means relative to your contract size, if you're randomly entering different contracts, different sizes, or maybe you're using the same size for every trade, you're doing it wrong. Please join our Discord and learn a thing or two. If your entry is here, for example, for a 1 hour trade, let's assume your entry is over here, then your stop loss would be placed over here, right? For this reason, your contract size, because this is a $2,000 distance, 2%, your contract size would have been extremely small. So how do we capture these pivot points? Now you have the house of MarketSpy, you have your momentum indications, but is there an earlier signal than that? And this is where MarketSpy Trend Runner comes in, because once you start dropping to lower time frames, you can see that when we break the trend and we close successfully below it, once we have the house of MarketSpy, once we have fading momentum over here, we can start then heading down towards our support level. Now, DSR is what we use to determine where that support level is. And here it is, we hit it. And as a matter of fact, this support level is monthly. We're not really interested in that. If we dial this back down to just normal, regular, daily confluence, you would see how we came here, stopped at the daily, these ranger rails, the blue line, the blue area over here, and the orange area over here. This is a pivot to pivot trade. And we have literally just done the same today, where we hit the ranger level and we're now reversing. So context and confluence, one particular indication is not enough. One sell signal is not enough. You need to understand what is going on here. And so Trend Runner. Now we need to understand what Trend Runner is. The way that Trend Runner works, right? There's going to be a little bit of a laser show over here, but worry not. It will all make sense once you understand what it is that you're looking for. So instead of using traditional support lines like you would do so right here, which gives you absolutely terrible entry as opposed to getting in over here, it gives you a terrible entry, reversal, and then another retest over here. Trend Runner basically identifies trends, and it looks for specific candles and their behavior to understand what the trend is going to be like. Now, at a first glance, it seems kind of random, but you have to understand these lines over here, these lines, they are actually telling us the direction of the trend. Now, here, while we were in the green, sure, we broke down, then we came up. It is still an uptrend over here up until the point where you had this printed over, and now these things are directional in terms of where price is going to go. And so whatever happens in between, it is all bearish price action according to this higher time frame on 4 hours. And when you have these trend lines that show up over here from the support, and we have some support over here, unfortunately we can't go back. They fade and eventually the old ones disappear because you need to focus on recent price action. But anyways, after we overcome those and we start seeing some green, we're now actually trending to the upside relative to the trend lines. And so if you have a trend line break above red, the green ones will immediately print support and show you directionality. So think of them as arrows. However, when the arrows break, it is time to cool off and we will see a little sell-off. So it's a 2-in-1 kind of situation here where, yes, you're being bullish, but at the same time, you're overall bearish, and this is what the trend lines will show you. They will show you areas of confluence that most others will not be able to see. So right now, it is extremely conflicting over here where we have red and green, and so that is expressed in price going up, down, and there's no defined trend over here. However, these attempts, every time we see something like this green, when price goes up, gets rejected, goes down, goes up, it is telling us that there is appetite in the market, and it would not print otherwise. In certain cases, you would just see red and never a single line of green. But now that we have these green lines, we're seeing that we're potentially entering a sort of rejuvenation period for the markets where you're going to be seeing directionality according to these trend lines on the lower time frames. On higher time frames, you're probably still in the red, and those are extreme levels of resistance where it's not that easy for price to break above these because of how they're structured and what they're paying attention to. And so if we stick to 1 hour, for example, and we see that we have an attempt over here, it breaks down, your stop would have been situated right at the top of this candle. Now, we don't have a house of MarketSpy here, but that's okay. We did have one over here. There was actually good symmetry all around. And the break of the candle over here would have given you an entry, but then price came down and stopped you out. So this is one example where that might happen every once in a while. But it's also like an L shape, and we need to get it as close to looking like a house as we can. And so in this case, it would most likely be you trying to draw this long wick with some sort of support and waiting for a higher low, which never happened until we came all the way down here. And this is where we finally had some reversal, some double bottom over here, which was the house of MarketSpy. And that low never got touched, and price has been creeping up ever since. So we have a break over here. Price goes up, comes back to retest. We have supporting line that's forming over here. Price breaks out of the red resistance line, continues, and directionally, it is following the trend line. So this is why it's trend runner. So price is going to be running on this trend. As an intraday trader, you could have been short over here, long over here, short over here, and so on. Long over here, short over here. As a matter of fact, we went short over here last night, and that was beautiful. These ghost lines are unvalidated, meaning that price can and probably will reverse here at some point. And if this doesn't hold, we will finally get a red line and we'll know that the trend is down. But so far, we had a break out of here. We're floating in the air, and trend line directionally is pointing up. So we can expect a break to happen somewhere over here, maybe like this. Price will go above it, retest, and continue following this trajectory towards our magnet zone. And this is your very basic understanding of what trend runner is. So gives you directionality, but also bearish signal upon a break, because it means it'll be trading below. And essentially a trend line is a rigid, hard-coded moving average in a sense, where you have reclaim, retest, continuation, reclaim, retest, continuation, reclaim, retest, failed, continuation, and going to reclaim now, maybe, I don't know, later on in the day. And this is what these levels are. All of the levels, horizontal levels, vertical, diagonal, Fibonacci's, moving averages, all need to be reclaimed, retested for a confirmation of demand. Without demand, there is no progression. And this goes for sellers too. They call it supply, but really they're just demanding sell areas. And so it's the same. Demand is what we're looking for when using this system. And so the house of MarketSpy helps you to navigate intraday setups like these. If you're sitting at support using one of our modules here, like DSR, for example, if you're sitting at support, look for the house of MarketSpy, confirm it with momentum, understand that you're literally getting in on the best part of the price action that is to come for the day, and just take it from there. You don't have to run all of this at all times. For example, look at this support, but we have no MarketSpy, the house of MarketSpy over here. We don't have any wicks to work with to draw something like this. We just don't. And so momentum is also bearish and entering a very cold territory here on the red. You're not expecting this to immediately reverse and go up. So you need to have some sort of confluence here, some sort of, support zone plus the house plus momentum, and then you can go and take that directional trade. Again, set the alerts on Trend Runner by right-clicking on it, clicking on Add Alert, and it's going to give you any alert function, and those alerts will be found here. So whatever you have set over here, confirm on close, you're going to get alerted on the higher low sequence, on the lower high sequence, and support line or resistance line validation. So validation happens when you have a couple of touches on that line, and you can define how many touches you would like to see. Currently it is set to 3. That's generally an average because I always count the markets in threes. For example, 3 legs down, 1 leg up, 3 legs up, 1 leg down, and so on. So 3 is the number that you want to use. And this is the distance of how close would the touch point be tolerated and confirmed as a touch. So 0.2 ATR of price. It doesn't necessarily have to touch it, but it can validate if price gets really close to it, and gives you some confidence. So another point right now. So for example, right now it is looking like it's coming down. You have to understand what higher time frame over here is showing us. If we set this to 3 days, 2 days, we can see that no matter what happens here, it is much better to look for an actual point that you can buy as opposed to looking for a point that you can sell, especially this early in the day. It's just started to run up and maybe it'll fully reverse, who knows. But you want to be looking for confluence that gives you the most probabilities in your favor. So you can go away, come back, see a little scalp, play it, sure, grab a little ATR point, 15 points down. But then eventually you are going to exhaust your attention spans. And it is better to let price do what it needs to do, find a pattern like this, and let this be your anchor from which you can then start trading. Speaking of anchors, if you have VWAP, use this point, reversal point, to try to see where the demand areas could be relative to this VWAP. And then it gives you just a little bit of extra confluence here. Now, this is very basic. I wouldn't rely on it, but it just shows you that people are who bought here, they're in the money. And if it goes below, people who bought here are out of the money. And you don't really need VWAP for that, because you can clearly see that this trend line is what indicates if people are in the money or not. Go below this trend line and you're out of the money and you're looking for the next support area and so on. So this is just the basics of what Trend Runner is. Break, you go long. Break again, you go long. Break, you go short. And over here, when we had that break, you went long. When we had these two, now these two are interesting because there was no break of any kind, but just over here, this trend line, when it started printing, based on momentum reading, you can see how it doesn't really necessarily have to break. The break was on this red trend line right here. So when that broke, supported by the green directional arrow of the trend line, you're following it until you break it. At this point, there's just way too much confluence here to ignore that this is now coming to an end. And you have a little consolidation here, slight little reversal, clear divergence on the green cloud here versus what price is doing. House of MarketSpy, which is a divergence method, prints you a little house. You put your stop loss at the peak. You wait for which candle? You wait for this to break right here. This is your entry. At that point, momentum starts to shift lower, and you ride it all the way down until you can actually see some momentum reversal or see the next house, or you can manually just kind of see where you're going. But then also, if you have MarketSpy Armageddon, it would be easy to see. You don't need to do any of that because it would be price below baselines. And then finally, when you have a reclaim, it's all the same thing. You would have been out of the trade for a decent short. And if that was not enough, you would be using DSR to see what the distance would be like and where you could potentially exit. And there are a couple of points here. This looks messy. I can turn a lot of things off for you guys to... So developing CPR, for example, these are very advanced concepts and you don't need all that. But yeah, so 1 point right here, no bounce. Second point, R2. And then very easy, follow momentum. And if you're not sure about this, just put a stop loss on, don't fiddle with it. Once you've identified a pattern, let the market do its thing and get into a trade and forget about it and start looking for exit points and assess price behavior from your entry. And that's really all there is to it. I'm sorry that if this is a little bit over your head. I don't know how to present simpler than that because, as you know, all people who have been doing this for a while, professionals, they tend to have this issue. I don't know what it's called, but you tend to assume that what you're looking at is very obvious and clear to everybody. But I understand for beginners it might be a little difficult. So that being said, if you have any questions and something is not clear, please come to our Discord and ask those questions, and I will make sure that you're on the right track. I'll put you up for this, and you'll be successful interpreting price action like this very easily using very sophisticated tools that no one else has. And this is the complete opposite of everything that you can find in books or from trading gurus or from the courses that they sell. So No need to identify candle patterns, just the pattern of a bundle of candles. Okay, so not a single point, but many. Have a good momentum system, have a good trend system like Armageddon, for example. And of course, you can use DSR for the ultimate support and resistance pivot system. I don't think there's anything better than that, to be honest. We use CPR at its core, but there's so much more in here that goes on that can make your life super easy if you give it a chance. So join the club, and I'll see you guys on the other side. Thank you very much, and stay hydrated, never liquidated.